What do you
Thank you,
make?
Leslie.
Is this idea that what goes up must come down if various factors such as interest rate increases are present?
Leslie, that's a great question. I think there's a couple of factors to be played into it, right? As you mentioned, the formula for the net present value, we also have to look at earnings and how we're projecting earnings going forward. So, if you're seeing a rise in yields, obviously that's going to affect your value on the present value of the cash flow, future cash flows. But when you look at a lot of these companies, a big thing that pulled forward and the big thing that's driving the price has been the earnings for a lot of these companies, especially during the throes that we're going through in 2020. And we saw a lot of demand pick up, especially for stay-at-home moves and a lot of these growth plays. And so if you're looking forward on these acts of what happens earnings forward, we saw that normalize, and a lot of these companies and management had normalized numbers in the last couple of quarters. But that trend is still going to pick up. I still highly believe in the trend. We're talking about mega cap growth, and we're going to see these earnings pick up, especially for these companies long term.
So should investors then be compartmentalizing this? Because you do have on one hand these kind of demographic forces, you've got these macro forces that are serving as tailwinds for these companies, but then on the other hand, you've got the potential for the cost of capital to increase. How do you kind of square those if you're an investor right now?
You have to definitely look at both sides, Leslie. And I think that's a great point. And one, you're looking at the macro environment and what the Fed does. And we saw today, Chairman Powell, give a lot of confidence in the markets and what their plan has been and their mandate has been for going forward for a while now. And so I think as investors, you have to look at both sides. Then you really have to drill down into certain companies that you really, really like going forward. If you're looking at a company, say Netflix, right? We're looking at a company that has subscriber growth, and a lot of that is coming internationally as well. And that's a play, and that's an area where I think there's going to be a lot going forward for Netflix to capitalize on. And if you're looking at Facebook and Google, these are companies that perform really, really well year to date. But if you're looking at Facebook, and ad streaming is really coming back. So there's options for a lot of people to drill down to certain companies that they like the business model going forward, despite what may happen on a macro level as far as rates.
Yeah, if we could bring up that full screen showing the year-to-date performance for some of these names, it's clear that there has already begun this dispersion effect taking place among these names. You can see Alphabet up 67%, while Amazon up 5% year to date. What do you see as the big risk for big tech moving forward?
I definitely think the big risk is going to be how kind of that game theory plays into if there is any sort of raise in rates. And we just had the great discussion on the Fed and tapering and different things that may happen. That's going to be kind of that game theory play. As you mentioned, the markets are anticipating, a kind of a slowdown in growth, and that could play into a sort of near-term sell-off correction. I think that's the biggest risk. But I think long-term, with a lot of liquidity that we still have with M2 and money supply still, at its highest levels, I think that will be, an ability for support for a lot of these companies. And then we'll look at earnings, and then we'll look at earnings going forward and how these companies are capitalizing on a lot of the things that they have for organic growth. But I think near term, you want to look at the macro level to see what goes on with these companies.
All right. Well, thanks for keeping an eye on it for us. Delano, we appreciate you being here.
Thank you, Leslie.